Hello, I'm Ed Kelly, and this is AAIS Pulse. Welcome to the second edition of Pulse, a video news magazine dedicated to exploring the most pressing issues and trends affecting the property and casualty insurance industry. Over the past several years, we've focused on modernizing our approach to advisory services and membership in general. Throughout the process, we have gained a lot of experience, learned many lessons, and built relationships with some of the most progressive companies and leaders in our industry. They have influenced our path and helped us achieve some terrific milestones in the areas like blockchain technology, artificial intelligence, data management, and risk modeling. While we've made some significant strides in achieving our vision for a modern advisory organization, we have stayed true to our mission to deliver exceptional value to our members, build bridges to the regulatory community, and support the overall insurance ecosystem. The Pulse News magazine provides an opportunity for us to share our experience, to engage some old friends and make some new ones. It is our goal to create a larger, mutual beneficial community where we draw on our collective strengths and experience to keep our industry resilient and forward-thinking. With that, I'm happy to introduce our first guest, an old friend of AAIS and our members. He is recognized as one of the leading experts on tax, banking, insurance, and financial services in Washington, D.C., and considered one of the most influential leaders in the insurance industry. It is my pleasure to welcome Bob Rusbuldt, President and CEO of Independent Insurance Agents and Brokers of America, the Big I. Welcome, Bob.
Great to be with you, Ed. Thank you for that kind introduction.
Well, we have a lot to cover and only an hour, so let's jump right in. We are still in the early days of the new Biden administration, but we've already seen change in the federal government. They walked into the middle of a pandemic and the debate over COVID-19 relief package. Where are we with that, and how could it affect our industry?
Ed, it's an old cliche, but it's still true. Elections do have consequences, and we're seeing that right now in Washington, D.C. We went from divided government with the Republicans controlling the White House executive branch in the United States Senate, the Democrats controlling the House, to the Democrats controlling the entire federal government. And we've seen the consequences of that, obviously, with the unprecedented historic number of executive orders by President Biden in his first several weeks in office. Those executive orders don't directly impact the insurance industry per se, but they pretty much wiped out most of the Trump executive orders from the previous 4 years. Not unexpected, but it is what it's all about in Washington right now. The consequences for the insurance industry are that we are going to see Congress and some of the state governments look at things like risk-based underwriting and looking more at community-based underwriting and rating, which is more in the health field, as we've seen in the past, but now they're looking at personal lines for property casualty. Social justice issues are going to play in insurance underwriting as well. The use of credit scoring, zip codes, education, profession, virtually gender, virtually anything that is not tied directly to your driving record or your vulnerability to natural disasters could be out of play. Predictive modeling could be radically different in the future. Congress may look at CRA for insurers, HUD disparate impact rules for insurance industry, labor rules. The Federal Insurance Office and the Treasury Department is going to have a different agenda, although we don't know what it is yet. States like Washington State are looking at risk-based underwriting issues right now. The NAIC has a task force to look at these issues for social justice and underwriting issues. So a lot has changed since January. You asked about the COVID relief bill. Everybody knows that's a $1.9 trillion package. It's a 591-page bill. Most of it has nothing to do with COVID relief, ironically. It includes things like $1 billion for socially disadvantaged farmers, $350 billion for state and local governments, a federal minimum wage increase to $15, et cetera. The primary impact in the insurance industry of the Biden COVID relief bill is in the health area. It expands Medicaid. There are ACA, Affordable Care Act extensions, There's COBRA subsidizations there. So most of it's in the health area rather than the PC area. There's still about $183 billion unspent for the PPP, the Paycheck Protection Program, which a lot of independent agencies and small businesses have used, both in the pre-packages and in the latest round of funding. So there's still money there available. We've already spent about $3.7 trillion on vaccines. This includes another $20 billion out of the $1.9 trillion for vaccine development and distribution. There's about $1 trillion that's still available from previous laws, which is kind of mind-boggling when you think about it. And this bill, you know, there's a half a million dollars for art museums, $100 million for underground rail system in San Jose, California. So a lot of this doesn't have to do with COVID relief. So welcome to Washington, D.C., Ed.
All right. Well, that's interesting. You kind of touched on it, even in that relief package. There's something to do with taxes, but obviously it looks like we're going to be doing an about face on taxes fairly soon. Obviously, President Trump lowered them. It appears that President Biden will raise them. Where do you see these changes, and how might they impact our industry?
Yeah, that's a good question. All we know today, there's been no bill introduced by the administration or anybody in Congress on a tax increase yet. But the Biden tax plan during the campaign was very detailed and clear. He wants to raise the top rate from 37% back to 39.6% for individuals. Of course, that affects a lot of independent agencies that are pass-through entities. 2/3 of our members at the Big I are pass-through entities and pay individual rates, so that's a tax increase for them. He would eliminate the special deduction for pass-throughs, the 20% deduction, which was huge for our members. He wants to raise the corporate rate from 21% to 28%, which affects every insurance company in the country, obviously. He wants to remove the cap on Social Security payroll taxes, which is huge for both individuals and companies. He wants to cap itemized deductions for individuals and so forth. So it would be, if the Biden plan as laid out in his campaign were enacted into law, it would be the largest tax increase in U.S. history. And of course, that's going to have consequences for our economy and for the insurance industry.
Yes. All right. Well, there's a few issues that hit particularly close to home for insurers, our members. I'm thinking about the flood insurance and the NFIP. Where does that stand in your mind?
Yeah, again, a good question. One last thing I failed to mention on taxes. He also wants to double the capital gains rate for certain at certain income levels. And in this merger mania in the independent agency system, that's a huge tax increase, doubling the capital gains tax. On the NFIP, that is in current law. That was passed in the last Congress, an extension of the National Flood Insurance Program until September of 2021, this year. You know, it's a perennial issue for Congress and most administrations to reform the flood program every year. For some reason, it generally never happens. And they do these kick the can down the road extensions. We do have time now. The flood program is in need of reform. I mean, capped at $250,000 for coverage for most houses in floodplains is not enough. Most houses need excess coverage. And so the program does need to be reformed. We know that the program is $38 billion in debt. That started with Katrina and it snowballed following Katrina. The program under its current rating system and sort of, in some respects, adverse risk selection is not sustainable if it's supposed to be actuarially sound, which it is not. Right. We've seen private flood markets. Lloyd's has come into the market and others where they're actually writing private flood insurance in coastal areas. Right. And I think that's an exciting development. The NFIP, interesting now, is buying reinsurance, which is a relatively new phenomena. And of course, they paid out in the last flood. So we'll see where all that goes. The jury is still out on whether the NFIP can be reformed before September.
Good. Thank you. Let's circle back on something related to COVID-19. The government is weighing in on business interruption. I know that your organization, along with our other insurance advocacy groups, have been coordinating that effort. It's a huge issue, right?
Absolutely, Ed. You know, right now, the number one issue for the industry is litigation. We've seen a ton of lawsuits filed against insurers, including some agents. And the good news is that the vast majority of those cases have been decided in favor of the industry. There are some outliers. We just saw one in Ohio recently. We saw one in North Carolina and a couple of others that have gone for the policyholder. The problem, though, Ed, for the industry is that we have taken a reputational hit with our primarily small business clients. A lot of small business people thought that if the government mandated a shutdown of their business, that would count as business interruption. Of course, that's not what the vast majority of policies say. If you use the exclusion language, it is very clear that it does not cover pandemics or viruses and those sorts of things. So there has been confusion, understandable. Small business owners are very busy running businesses and making payroll, but some were surprised by the government mandates to shut their businesses down, that didn't count as business interruption. So independent agents and brokers have been working overtime to educate their clients, policyholders on what's covered, what isn't covered. We've seen legislative proposals in Congress, Ed, including PREA, the Pandemic Risk Insurance Act, which is modeled on TRIA. The Terrorism Risk Insurance Act was introduced in the last Congress by Carolyn Maloney from New York. We expect that she'll move forward with something similar again. Chubb has a proposal. Zurich has a proposal. The Big I, working with APCIA and NAMIC, has a proposal. Is the Business Continuity Protection Program based under the PPP program that's been so wildly popular with businesses. So there's a lot of proposals out there. I think eventually Congress is going to have to adopt a bill to deal with pandemics going forward. We know that if we did pay out BI claims, literally there's not enough surplus in the property casualty industry to cover all of those claims. Which is a staggering number when you think about it. So Congress is going to have to step in. We need a public-private partnership similar to TRIA, terrorism. We need that for pandemics going forward. I think Congress will address that. It's not on the front burner, but it is on the back burner.
Okay, well, looks like you have your hands full, no shortage of issues for the Big I to focus on. Any positive things we can look forward to in the legislative and regulatory arena?
Well, you added a caveat in the legislative and regulatory arena. I was going to say the positive outlook is my golf game has been improving, but I don't think your audience really wants to hear about that. No. Yes, there are some positive things there. I think there's so much pent-up demand in our economy that we're going to see a mini boom in the very near future. Once the country is primarily vaccinated, in my opinion, we'll see an economic upturn just because of the pent-up consumer demand that's been building in the last year. That's good for the insurance industry. That's good for independent agents and brokers. The more people, the more houses people are buying, the more cars, the more washing machines, the more opportunity for the insurance industry. Interestingly, the industry and the independent agency system has weathered COVID quite well, especially in relation to the hospitality industry, restaurants, et cetera. And we've done 2 surveys of our members during the pandemic, and they generally have been positive. Of course, every agency and every insurance company is different. They have different niches, different strengths and weaknesses. But generally speaking, the industry has done well. Obviously, with less driving, there's less accidents, and you all are experts and know the results. So we have weathered it well. I think we're going to come out of it well. I think the industry is poised for some good times in the immediate future. The problem we're going to have is really not the marketplace as much as it is regulation, and legislation. I think those are going to be the biggest challenges for the industry, which of course are artificial, not real world marketplace issues.
Well, that's encouraging. That might be the most encouraging comments we've heard so far. So that's great. As you know, Bob, we seek to build a business model that departs from the past, a modern advisory organization. And we have been in the forefront of some of the pretty advanced technologies in our industry, from machine learning and AI to blockchain. What do you see as technology advances to pay close attention to in the year and the years ahead?
Yeah, another good question. We have something called the Agents Council for Technology with over 80 insurance companies and vendors and other entities involved. And we are very, very involved trying to position independent agents and brokers for the future, working much closer with our company partners and the agency management system companies, et cetera. I'm really bullish about the future of the IA system, and a lot of it has to do with the technology that we're able to deploy in independent agencies to make us more efficient and effective, both with consumers and interacting with our insurance company partners. You mentioned AI and machine learning. The opportunities for our industry, Ed, are limitless, right? I mean, in assessing risk and determining, probable property, building damage following a hurricane or tornado, et cetera. So I think the predictive modeling we can have, we've only scratched the surface with AI and machine learning. Big data is huge for insurance companies and for agents and brokers. I'm excited about some of the development in dashboards for independent agencies where they're going to have real-time data and they can drill down on every single client and know more about their client than the client knows about themselves. When you're assessing risk, that's super important. So I think we're going to be able to underwrite and sell insurance in more efficient and effective ways than we've ever been able to do before. Machine learning with claims, you guys are even more expert in this than I, your audience. I think it's limitless. Detecting and preventing cyber incursions and cyber problems is going to be huge with AI innovation as well. So a lot of opportunities there. The Agents Council for Technology is really working on some cutting edge stuff.
Good. Well, you made a comment about the economy and hopefully the rebound, but I'm sure our members and yours are very interested in how do you think the economy affected independent insurance agents and brokers thus far, and what's your outlook for them?
Yeah, I think it's, as I said, we've come through it pretty well. We've done 2 surveys of our members. Our members that were heavy in hospitality have seen some challenges, obviously. But a lot of our agencies are well balanced. Main Street America, depending on the state you live in and work in, here in Florida right now, everything is open and functional, and restaurants and hotels are up and running and operating. And then you go to California, where everything is virtually shut down. So every state is different. The economies are different, and therefore independent agencies and brokers have been affected differently. But generally speaking, on a national basis, the IA system has come through COVID so far pretty well. Now we'll see when contingencies come out in the rest of this year, how that looks. They're based on profitability and loss ratio and those things. And we'll see how that turns out for the IA system. But generally, we're positioned well for the future. Interestingly, in a little digression, I predicted 25, 30 years ago, the 2 channels for insurance distribution would be the IA system and direct, that the captive agency system was not going to be sustainable for the future. And that is coming to pass. We've seen it with Nationwide transitioning totally to independent agents, Liberty Mutual transitioning, American Family buying Main Street America, an independent agency company. The independent agency system is robust and it is ready to rock and roll in the future.
That's good news. So we know new and emerging technologies often bring new risk and opportunities for our industry, and we need to help manage those risks. Where do you see the biggest opportunities for new product and service developments?
Yeah, that's there are people that are futurists and probably better to answer that than I, but everybody knows autonomous vehicles is in the future. It's just a question of when. We had a consulting company address us. We've had companies like Travelers and Progressive address us as independent agency leaders with their vision of the future. And it's fascinating information and studies that both insurance companies and outside consulting firms are doing. Autonomous vehicles, they've been testing them in Pittsburgh now for several years. If you've ever driven a Tesla, it's basically a computer on four wheels. Fascinating stuff. But claims issues around vehicles at different stages of autonomy is really going to be the immediate future for the insurance industry. When you have old fossil fuel vehicles, and then you have autonomous vehicles, and there's accidents, and it's going to be a challenge for the industry to sort all of that out. So pod cars in the future is going to be something that we have to address. Business interruption is on the front burner right now. That has to be addressed. That's going to be a future issue as well. Risks around remote work, we're in that now. That's going to continue for a while. So the cyber landscape, I think, is the biggest Achilles heel for the insurance industry. Talking to my European friends and colleagues, they view it as the number one challenge for the insurance industry. I don't think insurance companies have a good handle on the exposure, the cyber exposure that we all have as an industry. People are working on that around the clock. Ransomware is going to look like peanuts probably in the future compared to what the cyber thieves and crooks are working on. And so I serve on a bank board as well. And, for anybody in the financial services industry, cybersecurity is front and center, number one. And cyber liability for our industry is something that's going to have to be figured out for the future.
You're right. I mean, I can't have a conversation. We have executive roundtables monthly, so we're in touch with our members, and cyber risk comes up in every session. So, it's something that's going to be a focus for our industry for quite some time, and a grow, as you mentioned, a growing focus. Well, we've got a number of folks are viewing this live, and they're sending in their questions. So I'm going to jump over to some of their questions now, and I'll encourage those folks out there to continue sending them. We'll try to get to as many as we can. This one deals with the farm and ag segment. Obviously, that's an area that we're very involved in. Where does the federal crop insurance program stand these days?
It's in good shape. There are no real challenges that we're aware of right now to the federal crop insurance program. Of course, it's an essential program for farmers. That is all sold, obviously, through agents and brokers. So the standard reinsurance agreement is in good shape. The USDA is always been supportive. The new Agriculture Secretary has been supportive. He is the former governor of Iowa. That's a good thing. So I do not see immediate challenges to the federal crop insurance program.
Oh, that's good. Okay. Another one here, which is interesting, talks about the remote workforce, or we call it distributed workforce. That's something we have, but the pandemic pushed many companies, many of our members, to reevaluate brick and mortar locations. Something, as I mentioned, we've done for years. How are these and other pandemic accommodation affecting agents and brokers, and also their customers that run their businesses?
Yeah, as I said earlier, I think the liability exposure as companies start figuring out their future policies for where people are going to work and how they bring them back full-time into the workplace, post-vaccination. And if one of your employees gets COVID in the workplace, what kind of exposure is that for the employer? So I think there's still a lot of unanswered questions that are going to have to be worked through as the economy opens back up, as people come back into the workforce. The independent agency system, interesting. Again, it depends on where you're located. I know many large independent agent and broker operations where they did total remote, and I know others that they were still going in the workplace every single day, even though customers weren't coming in their office. So there's no one size fits all on how the independent agency system, the principals were dealing with COVID. Every agency dealt with it differently. And again, it had a lot depend on where you were located. As far as commercial buildings and bringing people back to work, I've talked to some insurance company CEOs. Interestingly, I won't name names, but I had one CEO tell me recently, he goes, Bob, my HR person's telling me that my employees don't want to come back to work. They figured out they can work at home and they want to stay and work at home. And the CEO goes, you're not an independent contractor, you're an employee. If I say you come back to work, you're coming back to work. I think there's going to be some tension on the horizon between management and employees as to where they are working. Employees have gotten used to working at home, and there's going to be some tension that has to be worked out in virtually every size company.
Yeah, good point. And yeah, it's kind of a lead into another question we've got online here. Given the often discussed talent gap in the industry, how can we attract the next generation of employees to risk and insurance professions?
That is the two biggest challenges for the independent agency system in our industry are the two T's, talent and technology. That's an excellent question. It's the number one question I'm asked by insurance company executives is the talent that we need to bring into our industry. The insurance industry, by age, is the oldest industry in the United States of America. Older than the airline industry, older than manufacturing. We have the oldest industry by age in the United States, which is fascinating and disturbing at the same time. So we have to attract talent. We've had an entity, a 501c3 educational organization called Invest in operation. Company executives serve on the board along with agents and brokers. And the raison d'etre of that is just to bring new talent into our industry, particularly the independent agency system. We're launching an apprenticeship program now. We're doing education in high schools, community colleges, and four-year undergraduate programs for risk management, bringing people in as agents and brokers and company people as well. So we have something called Big I Hires. We had 80,000 candidates looking for jobs in the independent agency system over the last 6 to 7 months. That is encouraging. You know what? If somebody one day is delivering pizzas and says, I want to be a CSR in an independent agency, I have thousands of agencies that will train you. And by the way, they might want an occasional pizza as well. So we have to bring people into our industry. We're not considered as sexy as being an investment banker and those sorts of things. But young people have to understand, we have tons of technology opportunities, right? It's all about tech. Everybody wants to work in a high-tech firm or work in a technology-related area. Well, the sky's the limit in our industry, Ed. We need to up our swag, so to speak, in technology, and young people need to understand the opportunities are not just what they thought it was 50 years ago in the insurance industry.
That sounds great, Bob. And anything we can do to support your efforts there. We do our own internship program every year. We bring in, over a dozen folks. Typically, they're studying some related field in college, sometimes not. And we introduce them to the industry, and it's a great opportunity for them. And fortunately, we're able to retain them. But the ones we don't, we release them, and many of them find their way in our industry. And it's a wonderful talent pool if we can attract them. So
exactly.
Let's see, another question around government policies. Are we still concerned about support for terror risk insurance?
No, right now that doesn't come up in the near future. I think this Congress will be very supportive of TRIA. Of course, it's been renewed several times. There's never been any claims under TRIA, so it doesn't cost the government anything up to now. The trigger levels are fairly high. So I don't see any challenge at this point in time to TRIA when it comes up for renewal in a couple years. And I think we're in pretty good shape on TRIA.
Good. So Bob, you've covered a lot of areas today. Is there something I didn't touch on or our audience hasn't touched on that you'd like to share with us?
No, you've really covered the gamut of everything. From an independent agency perspective, as I said, talent and technology are the two fundamental major issues for the independent agency system. They will be for the foreseeable future. But again, those are marketplace issues, as I said earlier.
Right.
The number one challenge short term to the industry is legislation and regulation. It's an old adage, but it's a truism that with one stroke of the pen, anybody can be put out of business by a politician. When President Biden signed his executive order on the XL Keystone Pipeline, he put 11,000 people out of business. Boom, done. So it is not an exaggeration to say with one stroke of the pen, you can be put out of business. And that's why we have to be vigilant. We have to be vigilant in our state capitals, with our state insurance departments, and especially with Congress in Washington, D.C. So supporting your trade associations, and that's what we do. That's sort of our claim to fame at the Big I. We have a full-time professional staff right on Capitol Hill, one block from the United States Senate. Supporting your political action committees. The Big I has a PAC called Insure PAC. It is one of the largest PACs in Washington, D.C. It is crucial to what we do. PACs do not buy votes. I know some view them as evil. You can view it as a necessary evil, but it does grant access. And so contributing to PACs like Insure PAC is crucial to protecting and promoting our industry.
Fantastic. No, our members greatly appreciate what you do. Obviously, you are focused on your members, but we know you're highly coordinated with, as you mentioned, the other trade organizations, especially those focused on advocacy, especially during these times. Well, Bob, I don't want to take any more of your time up. You've got a lot of important work to do. As always, Bob, it's a pleasure to have you with us. I know our members and our guests feel the same way. So thank you so much for your insights today.
Ed, thank you so much for having me. AAIS is a great partner of the Big I. You're a great partner and friend of mine, and thank you for all you do in our industry. And thank you to everybody listening.
Fantastic. Thank you. Okay. Up next, at the top of the hour, our own Robin Westcott, Head of Government Affairs, Legal and Compliance, will welcome Pat Hughes, a partner and expert on insurance, legislation, regulation, and public policy at the law firm of Farger Drinker. You don't want to miss it. Stay tuned.